Hello ladies and gentlemen, and anything in between. Today's video will be about double entry bookkeeping. As well as that, I will be going through T accounts and doing examples of double entry bookkeeping. Before we do that, you have to make sure you know the keywords down below. An asset is an item that the business owns that is of value. They don't keep with the intention to sell. For example, a vehicle or property. Liability is something that the business owes, for example, a bank overdraft. Drawings is money taken from the business for personal use. And then we have capital, is any money invested into the business. Okay, so what is double entry bookkeeping? Double entry bookkeeping recognizes that each business transaction has a dual aspect. A separate account is used to record each different type of transaction. The account used to record the business transactions are commonly known as T accounts. So this is an example of a T account, where you have a debit side and a credit side. We will get to know more about this as we go through the examples. We have the title on the top. We have date, detail, and amount. DEADCLIC. You must learn DEADCLIC. I can't put it in any other words. It helps us identify which sides of the T account to put our amount on. So for DED, it stands for debit, expense, asset, drawings. So all expenses, assets, and drawings go to the debit side, which is the left side. CLIC, it stands for credit, liability, income, capital. So all liabilities, income, and capital go onto the right side, on the credit side. In this video, I'll be going through two examples. This is the first one. So it says on the 1st of September, started in business with a capital of 5,000, a check paid into the bank. So what do we know straight away? We've put capital into the business, meaning money, which is 5,000. So our first T account will be capital. And it says we've put it in the form of bank, a check. So since we know both about T accounts, we can now open them both up by putting the title above their T accounts, capital and bank. So now we've done that, we have to write the date, detail, and amount. So we go back, it says 1st of September, that will be our date. Okay, so now we have to put it into the T accounts. You might be wondering which side of the T account to put it on. Let's start with capital. For capital, DEADCLIC tells us that capital increases on the credit side, meaning the right side. So we put the date on the right side. And then for detail, we would basically write the opposite T account, which is bank. So we write the date, then we write bank as the detail, and then for the amount, we go back, it says £5,000. We put £5,000 in the amount section. So now we've done that, we basically do the same for bank. However, bank is an asset, and DEADCLIC tells us that assets increase on the debit side, meaning the left side. So again, we put the date, which is the 1st of September. For detail, we put capital, basically the opposite. And then for the amount, we put 5,000. Okay, so the second adjustment is 4th of September, bought office equipment, £2,500, paying by check. So the two accounts we'll be using is office equipment and bank. Check basically means bank. So we go in and open up an office equipment T account. However, we don't have to open up another bank account because we already have one. We made one from the previous adjustment. So now we go back to get our date, which is the 4th of September. And then we go back to our T account. Office equipment is an asset, so it will be going onto the debit side, the left side. So you put the 4th of September on the debit side of the office equipment. For detail, we put bank because we paid by check. And then for amount is 2,500. And then we go into the bank account. The bank is an asset. It increases on the debit side, on the left side. However, we're paying by check, so it was decreasing. So a decrease will go on the credit. So once again, you put the date, detail, and amount, but this time on the credit side because it's decreasing. Third adjustment, on the 7th of September, paid rent of office, £500 by check. So for this adjustment, we will be using rent and bank. So now we have to open up a rent account. However, for bank, once again, we already have a bank account. So we just use the same one. Okay, so now we have to fill out our T accounts. It says for date is 7th of September. So we go into our rent account and we know that rent is an expense. And DEADCLIC tells us that expenses increase on the debit side, on the left side. So we put the date onto the left side of rent. For detail, we put bank. And then for the amount, we've been told is £500. So for the bank, we do the same thing. We write the date, the details, and the amount. However, we put it on the credit side. This is because we're paying rent, so bank is decreasing. And bank decreases on the credit side. Fourth adjustment. 10th of September, received a commission of £100 by check. So once again, one of our T accounts will be bank because we got it by check. And then our second one will be commission. So we open up our commission account and go back to our details to check the date. It says 10th of September, so we go into our commission account and commission is income. And we know that income increases on the credit side, so we put it on the credit side of commission, which is the right side. And for detail is bank because we will be putting it into bank as well. So we put bank as detail and the amount is £100. Now we go into our bank and we know that bank increases on the debit side and we're receiving commission, we're receiving money. So it goes onto the debit side, the left side. Our fifth adjustment. On the 12th of September, withdrew £250 from the bank for own use. So the two accounts that we'll be using is bank because we're taking money out of the bank, and then it's for own use. At the start of the video, I gave you a few definitions to remember. One of them was drawings. Drawings is when you take out money for your personal use. So we will be using bank and drawings. Also, DEADCLIC tells us that drawings goes onto the debit side. So we'll be putting the date, which is the 12th of September, onto the debit side of drawings. Once again, details is bank and the amount is £250. So we're going into the bank and do the same thing. However, is money coming out? So it comes out from the credit side, which is the right side. Okay, our last adjustment. On the 16th of September, received a loan of £1,000 from James Henderson by check. So the two accounts that we'll be using is loan and bank. So for loan, a loan is a liability. It's money we owe. So we will be putting it onto the credit side because DEADCLIC tells us that. So we check our details again and it's 16th of September. So we go into loan on the credit side and we type in 16th of September. For detail, we write bank, and for amount, we write £1,000. Now we go into the bank and we will be putting it into the debit side because bank is increasing, we've got money, so we put that in the debit side. So now we have all the amounts in. The only thing we have left is to total them up and balance them. By this I mean both sides have to equal the same amount. And the balance figure is the one that you take and you put in your trial balance, and then that gets used in the income statement and statement of financial position. I've posted a video about the trial balance and statement of financial position as well. So if you're interested, I'll put the link down below. So balance CD means balance carried down, and balance BD means balance brought down. So the balance brought down will be taken into the income statement and statement of financial position. So I will be balancing them all up, and I'll just fast pace the video so I don't waste your time. Alright, so this is the second example. The following are the business transactions for April 2002 of William Kings, who runs a food wholesaling business. 2nd of April, bought goods 200 on credit. If you don't know what credit means, it means buy now, pay later. So the two accounts that you'll be opening are purchases and trade payables. The reason why purchases is because we've bought goods, and trade payable is when we've bought goods on credit, buy now, pay later. Okay, so we go back to check the date. It says 2nd of April. So we go into our purchases, and purchases are an expense. So we put it on the debit side of purchases because that's what DEADCLIC tells us. For detail, it will be trade payable, and for the amount, it's £200. And then trade payables are a liability, so it goes up on the credit side, on the right side. The second adjustment is basically the same as the first one. The only difference is the date and the amount. So same again, we go into our purchases and our trade payables. We write the date, details and amount, and that's it. Third adjustment, 5th of April, sold goods, £150 on credit. This time our T accounts will be sales and trade receivables. This is because we're selling goods, and trade receivable is when we sell goods on credit, buy now, pay later, where the trade payable was buying goods on a buy now, pay later basis. So now we check the date, which is 5th of April, and we go into our sales section. Sales is income, and DEADCLIC tells us that income increases on the credit, so we will be putting it in the credit side of sales. So for details, you put trade receivables, and the amount is £150. Trade receivables are an asset because they owe us money, so technically we own the money that they have, so it's an asset, and assets go on the debit side. Fourth adjustment, on the 7th of April, sold goods, £170, a check being received. The difference between this and the one before is this one we're receiving the money straight away. So it goes into the bank because it's paid by check as well. So what we have to do now is open up a bank account. However, we don't have to open up a sales account because we already have one. The date is the 7th of April. So we go into our sales section on the credit side. The reason for this is sales is income, and income increases on the credit. So we get the date, and then we check for the amount, which is £175, and we put that in as well. And for the bank, we put it on the debit side. This is because we're receiving money, so the bank increases, and bank increases on the debit. 9th of April, returned goods, £15 to trade payables. So the two accounts that you'll be using for this is the purchase return account and the trade payable account. You might be wondering why we don't just subtract the purchase balance or just credit it. It's because in our income statement, when we put purchases, we subtract purchases by purchase returns in there. So the date for this is the 9th of April. So now we go into our trade payables account, and we put it on the debit side to reduce the trade payable amount. So you put the date, and detail is purchase returns, and for the amount we put £50. Now we go into our purchase return account. Our purchase return account is a decrease in expense account. So it is an expense account, however, is a decrease in expense account. So when we decrease expenses, we put it on the credit side. So when we go into our purchase return account, we put it on the credit side. Basically the opposite of whatever you did to the account before. So in our trade payable, we debited it. So in the purchase return, we basically just credit it. 12th of April, sold goods, £110, a check being received. So the two accounts that I'll be using for this is sales and bank, because we've received the money by check. So we already have a sales and bank account. So all we have to do is just put the amounts in. So for sales, it increases on the credit. So we put it on the credit side. And then for bank, it increases on the debit side. So we put it on the debit side. So the date will be the 12th of April. And the amount is £110. So we put in the credit side of sales and debit side of bank. On the 15th of April, goods returned £25 by trade receivable. So the two accounts I will be using is trade receivables and sales return. Once again, the reason why we don't use the sales account is because in the income statement, there's a section for sales return, so you have to put the balance of the sales return account into it. So now we've made the sales return account. I apologize, I've written sales receivables instead, but I'll fix the error later. We'll have to go and check the date, and the date is the 15th of April. So because it's a decrease in trade receivables, it will be going on the credit side, because that's a decrease in asset. And then sales return. Sales return is a decrease in income. So a decrease in income goes onto the debit side. So we put the date, detail, and amount on the debit side. 17th of April, bought the weighting machine for use in the business, £250 on credit. So the two accounts that we'll be using is weight machine, which is an asset, and trade payables, because we bought it on credit. So first of all, we have to open up a weighing machine account because we don't have it. And we check the date and it says the 17th of April. So because weighing machine is an asset, it increases on the debit. So we put it on the debit side of weighing machine. And for detail, we write trade payables. And the amount is £250. And because it's an increase in trade payables, it means it goes on the credit side, because DEADCLIC tells us that liabilities increase on the credit. So we put the date, detail, and amount. So for the date is 17th, and for the detail is weighing machine, and the amount is 250. We've finally come to our last adjustment. On the 28th of April, sold goods, £100 cash being received. So the two accounts that we will be using is sales and cash. So just like always, when we don't have an account, we create one. So I've created a cash account. So now we go and check the date. It says 28th of April. So now we go into our sales account and we write 28th of April as the date. For the detail, we write cash, and then for the amount is £100. Now we go into our cash account. Our cash account is an asset, and we are receiving money, meaning the asset increases. And DEADCLIC tells us that assets increase on the debit, on the left side. So you put the date, detail, and amount. Just like the previous example, I will have to balance them up. So I'll just fast pace the video and we will see the results, the final results at the end. And there we go, ladies and gentlemen, we have finished the two examples. I hope you've enjoyed and you found it useful. Please make sure you like and subscribe. Thank you very much. Have a good day.